Right, there we go. So, welcome. No. Just a second. I don't know why. Yeah. Welcome to the first virtual fund meeting of my group. My name is Gonçal, and I'm going to start with a joke. I don't know if this is going to work. If you like it, I will carry on with a joke at the beginning of the meetings. So the joke is, I think that Ireland is the richest country in the world. Do you know why? Because its capital is Dublin. So capital, Dublin, anyway. Cool. So who's your portfolio manager? So it's me, Gonçal Camara. I'm a fourth year mathematics student. I'm doing the integrated master's program. So anyone that has any question about the modules that I've done or anything related to a maths degree or a master's degree, just send me a message. I was the financial sector analyst 3 years ago, then the co-head financial sectors 2 years ago, and the portfolio manager with our president last year. So in the past, the competition used to be split in different sectors. So for example, the financials, Forex, commodities, but 2 years ago, or yeah, last year, we didn't have any sectors anymore, so all the groups could invest in any sector, let's say. So at the moment, you are analysts. I mean, I will go with that in a minute. And then I hold the CFA Investment Management Certificate. This is a very good certificate. It took me, this is one of the 2 books. It took me more or less 2-3 months to pass the 2 exams. Come in. Are you here for the LUUTIS event? Yeah. Are you here for the LUUTIS Virtual Fund event? Good. Take a seat, please. So yes, it took me more or less 2-3 months. I did it in the summer of 2019, so between my first and second year. So I started with this, with the certificate in July maybe, and then I did one of the exams in Cardiff, and then when I came back to Leeds to do my second year, I passed the second unit in Leeds. So this is one step below the CFA, which you might have heard because it's kind of the most prestigious financial certificate in the world. So this is one step below the level 1 of CFA, but anyone that wants to discuss anything about this as well, please do let me know. And there you have my LinkedIn profile. Very, very important. Now, raise your hand if you have a LinkedIn account. All of you don't have as well. Okay. Raise your hand. The ones that, let's say, have a pretty good LinkedIn account. Good. So, actually, let me open my LinkedIn account. Right, so this is very important. And the thing that I wanted to tell you about this is that it is something that evolves over time. It's not kind of something that you create in 1 hour and you have the profile done and you will have that for many years. No, it's something that you make. You might want to connect with some people. You might want to add some info of your university, some volunteering work that you've done, some jobs that you've done. But what I mean is that yeah, it's good that all of you have the account. So I'm saying, I mean, because this feels a bit scary, like when you see other profiles and you feel, oh, my profile is really bad, I need to improve it, but I don't know how. So to me, the important thing is that you spend some time on it from time to time. So the first step, obviously, is to create the account. Then you might want to connect with some people. Then you might want to get a nice picture. Then you might want to start, I don't know, liking some posts, comments, like congrats for your achievement or whatever it is. Then you might want to start with your university information. Then after a month, maybe 2 months, I have some time now. I'm going to look for other LinkedIn profiles. It's very important that you get ideas from other profiles. So don't be scared of going into people's profile, okay? Because you learn a lot in their profiles, and sometimes they are very interesting. So you get the ideas and then you put them in your profile. So for example, don't think that I did this in one day. I took, I don't know, in one summer, one day, and I did the whole profile. No, this has had many evolutions, let's say. And very important, trust me. Because I mean, the more connections you get and the better your LinkedIn profile becomes, the more you see that interesting people get interested about you and what you do, and they message you and what you do and all of that. So it's important to talk to the world, and LinkedIn is a really, really good way. Right. I get this every time. Anyway. Now, introduce yourselves, analysts. So please, your name, your degree, what year are you in? So, hello mate, are you here for the LUUTIS Virtual Fund? Cool, so sit down please there. Yeah, thank you. So, yes, please, introduce yourselves so we know who you are. So, please. Cool. Very good.
Hi, I'm Conrad. I study economics and I'm a first year.
Cool. Next one.
I'm Polly. I'm doing economics in last year. I'm Amanda. I studied economics in last year as well. I'm in second year studying management.
I'm Jack. I'm studying business analytics.
Cool, so most of you know this building already. So quickly, the ones that have studied or are studying the masters, did you study the bachelor's degree in Leeds or somewhere else, or do you understand me? You are now studying a master's degree. Where did you study your bachelor's degree? As well in Leeds or in the UK, or your undergraduate degree? Okay. And what did you study? Okay. Okay, cool.
I say Leeds too.
Cool. So actually, something important as well to note that kind of in the financial world might not matter too much what you study to get a role in the financial industry. So don't be afraid of telling people that your undergraduate and master's degree don't match. Great. So why are you called analysts? So you are called analysts because you will take part in our kind of virtual fund portfolio. you will bring trade ideas, or I will try to make you bring new trade ideas every meeting, and your trade ideas will certainly be converted into portfolio trades. I mean, I might have said, okay, you can bring trade ideas and then we can discuss if to put the trades or not. But I think people, if you tell that to people, they kind of get a bit scared, thinking that their trade ideas are not very good because they might not be put into the portfolio. So yeah, let's say that everything that you bring, I mean, it has to make some kind of sense, but everything that you bring to the meetings will be, I mean, we will put a trade of the company. Cool, next. Oh, that's nice. First game of the session. Cool. So we are going to do this every meeting. So you need to think of a US company that is publicly listed and that is trading right now. So that's why it has to be US, because it has to be trading right now, and the US markets are open right now. So start thinking for something like Facebook, Tesla, Apple, Amazon, and all of those that you probably know very well. A hint to win the game is to look for a volatile stock. Why? Because the game will last for, what, 25 minutes, 30 minutes. So what we look for is for a stock. I mean, we write down now the price of the stock. I mean, you will write down in this piece of paper, so grab your phones and things. You will write down the name of the stock and the price of the stock. And then what you are looking for is for that stock to rise, let's say, in the next 30 minutes. And the stock that raises the most will win the game. And we'll get some prizes, which are some Ferrero Rochers and some sweets. So, quickly, I'm going to start here. Gonçal. Let's put here first game. Okay, and I need to say, yes, write down the chosen stock and the price of the stock to 2 decimal places. Check the stock price on Google. So you type, for example, Tesla, Yahoo Finance on Google. And you go probably to the first entry. And you write down the stock. So I'm going to put it here. Gonçal. My stock is Mercado Libre, which is, I think, is listed in the Nasdaq 100. So Mercado Libre, and the price right now, Mercado Libre, Yahoo Finance. Don't worry about the ticker or anything like that. So 1528. So don't worry about dollars or anything like that. 1528.84. So, you write here your name, the stock, and the price. And that is traded right now. Did you understand the game? Did you understand the game? So you need to write your name here, the stock, okay, the stock that you choose, okay, and the price. And that is traded right now. Okay? So you choose one stock, one US stock, but it has to be trading right now, okay? Because if not, the game doesn't work. So I'm doing this game because there is a very important, let's say, thing or formula that you need to know, which is the percentage change of a stock. I mean, it could be a stock or index or anything. And it's very, very important that you have that in your mind all the time. So, cool. Next. Okay, I hope that once you get that, you carry on paying attention. So, the group meetings. we will start with the first game. I mean, the game that I've just mentioned. You lost my joke, I think, at the beginning. Let's see if I find another good joke. I will start with that. Next meeting. Then a market update, news, indices, and stocks. Then portfolio performance and new material in terms of, let's say, financial concepts. So what are stocks, what are bonds, what are futures, what is a financial derivative, and all of that. Then trade ideas, which will be my trade ideas and your trade ideas, and then a discussion around those trade ideas. And finally, a Kahoot quiz. Let me modify that. Kahoot quiz, which again, I mean, it will be a financial Kahoot, and the winner will get another prize. Right, anything to say, any question or anything? No, great. So let's start, market update, news. The first one, I think the most relevant at the moment, 2021 United Nations Climate Change Conference, COP26, being held in Glasgow. Does this open? Yes. So yeah, the summit will bring parties together to accelerate action towards the goals of the Paris Agreement and the UN Framework Convention on Climate Change. So this has to do with climate change, with the Paris Agreement, with obviously many relevant areas. And it's important that when it's important that when when I mention the news, it is relevant to investing, let's say, or to our portfolio, or, I mean, it has to be relevant. I mean, we could discuss any kind of news, but it's better if they are relevant to our area. So this thing has ramifications with the ESG investing. What is this ESG investing, which probably you might have heard already? Environmental, social, and corporate governance. ESG is an evaluation of a firm's collective conscientiousness for social and environmental factors. I took that from Wikipedia. So let's say how environmentally friendly the company is. Obviously, a company that mines coal won't be the best one in terms of ESG, and someone that invests in renewables energy, so obviously it will be at the other point of the spectrum. So how are we doing with the game? Okay. So there is something interesting with this ESG, and the thing is that now apparently everyone wants to invest in companies that are good at ESG related, let's say, topics. But something tells me that if everyone now invests in the same companies, those companies are no longer good to invest in terms of stock price and making money. Do you see my point? Because, I don't know, for example, 5 years ago, that this wasn't as important as it is now. Companies of renewable energy companies, that the market didn't care about them pretty much. So they probably were good investments. But now that the market cares about those things, if everyone invests in those companies, So share prices will go up, and that means that yield or return will go down. So there has to be there a balance between, yes, that's really good, we are looking for ESG companies because we need to save the world and we need to go net zero by a certain year, but then you have the investment part in terms of return and making money, which by the time we want to put some money there, the returns might have vanished already. Cool, next one, UK and France in a fishing row. So this is as well things to do with Brexit. I think Brexit will probably never go away. And yes, as well, we need to look for the investment part. So are there any fishing company in the FTSE 100, for example, or some that has something to do with this? The same in France. So that is the kind of things that you should be looking for when you read the Financial Times, for example. So it's not, you need to start training your mind. So you just don't read something and, okay, I know about this now. So you need to start training your mind to think what can be done with what you've just read. Okay. Next one. Inflation fears, Fed expected to announce plan to taper asset purchases. So here, for example, this taper means, okay, interest rates have been very low for quite a long time now. So what central banks have been doing is buying pretty much everything to keep kind of the market going. So taper here means that that amount of buying purchases will be reduced gradually. Okay, so the same, scaling back its massive 120 billion monthly bond buying program this month. This is recovering from the pandemic and contending with surging inflation. This is very important as well right now, because if we get inflation, interest rates should go up, so inflation doesn't skyrocket, and that means prices of the bonds, let me see if I get it right, interest rates up, prices down, yield up, yes. So if interest rates, I mean, we can go through this the next meeting if you want, because it's something very, very important, but it's difficult to understand the connection between inflation and, thank you for that, mate, between inflation and interest rates and the market. So once you understand it, once you kind of, the thing clicks in your mind, it's very important to understand that. And then this is for a specific company, which is, I mean, so striking. Hertz announces it has bought 100,000 Tesla electric vehicles. And this was probably last week. Second, the first car maker to be valued at 1 trillion after rental group Hertz said it had ordered 100,000 Tesla Model 3 sedans to electrify its fleet. So look at this. I mean, those numbers are just ridiculous, because we should be looking for something like this if it is a really, really good year, not one day. So that tells me that there is probably some kind of bubble going on at the minute, and probably in particular with Tesla. So yeah, there we go. I mean, there you have what a piece of news can do to a company. I mean, it can send the price more than 10% up. I mean, to a company that is really, really volatile, and which is something that you should avoid. in terms of real money, because you will probably, otherwise you will probably lose money. I mean, it's probably good to start with something like, I don't know, let's say McDonald's or Coca-Cola or things like that, which are companies, let's say, much more robust than Tesla in terms of earnings and share price. But there we go. And then you have that Elon Musk says that no deal has been signed yet. I mean, this, and actually this hasn't done anything to the share price, but I mean, this should have sent the share price of Tesla 10% down, something like that, but it has not. So yeah, we are living now in a moment where just news sends companies over the roof or to the ground. So there we go. And again, we should be getting that investing mind. So how about other vehicle manufacturers such as Volkswagen or, I don't know, Aston Martin, and how about their electric vehicles, because this relates to that. So how are those companies doing, and do they have this kind of news as well, that they are selling, I don't know, cars, trucks, or whatever it is to another company that has bought many thousands of cars to those companies. So you need to start getting that investing mind. It's very important. Any more relevant news? Anyone that has something in mind that wants to discuss? Come on, guys. Don't look to the table. Think. I don't know, or since you started the course for the past month that you've read and you think is relevant to the financial world, to us, anything. Yes, please.
Evergreen defaults non-priorities in China.
Yes, very important. So, did everyone hear that? Cool. So, yes, apparently there is a kind of a real estate company in China that is really big, that has some financial problems. So, how can that relate to anything that we might have in our portfolio? That is what you should be looking for. Okay? More. Cool. How are we doing with time? It's already 35. We'll be done by o'clock. Okay, more. So yeah, again, that mindset. I read something, I don't only read it, I read it and I relate to other things and to my group in LUUTIS or to my own money, which you probably have that more in mind. But yeah, very important. Right, next one. Market update. Indices and stocks. US markets at all-time highs. And now let me show you. This is visual chart 6. So US markets at all-time highs. This chart is from earlier than 2000. Look at where we are at the moment. We are at some crazy levels. And I would like to give you some, let's say two words of advice. The first one, it's kind of funny because you might have heard that in the investment world, a share price or an index goes up like through the stairs. but goes down in a lift or in an elevator. And this is because, for example, here in this upward trend, as you can see, I mean, it takes some time because this is in years. I mean, we could put this in months or days or whatever it is, but just as to show you. And then we have this very, very big drop very quickly. Okay. That happens most of the times, but you might see something different here. And is that now things apparently have been reverted. So now we go up in the lift and we go down, I mean, let's say these small drops in the stairs. So that tells you as well that we're in a bubble at the moment. That is at least what I think. And the second word of advice is that unfortunately, in your first years of investing real money, you will probably lose money. I'm not someone that want to give out bad news, but it's what the numbers say, that more or less 75 of the traders lose money in the first years. And this is because you are against, I mean, the stock market is a zero-sum game. If you win something, someone else is losing it. So when you put some money in the market, you are betting it or you are investing it against probably some kind of big firm that has some professionals that have been in the industry for many, many years. So they will know how the market works. You will not know how the market works. And I mean, they know pretty much everything. We don't know much of the stuff. And that means that we will lose their money to them, let's say. So maybe it's a good idea to run away from things like Tesla, for example, from things like Bitcoins or cryptocurrencies, for example, because first, they are very, very volatile, and that means that you will be out of the market sooner or later. And second, so yeah, volatility, and second, I forgot what I was going to say. But yes, the second one, that there is no real factor underlying those. I mean, there is no real economic factor, for example, behind cryptocurrencies, and probably, in my opinion, there is not much underlying factors in terms of earnings in Tesla, for example. So just be careful with what you do with your real money. I mean, we will have 1 million euros, fake euros, in our account this year. But just be very careful with your real money, because you are very likely to lose money. Overall, you might get some money in some trades or for some time, but you will probably end up losing that money after some point. But if you carry on in the world, if you carry on learning, you will start to learn some of the things, and in the end, you will be the one that is getting the money from someone else that is new to the market. Right, so yeah, US markets, the S&P 500, this is the kind of the most important index in the world. NASDAQ 100, the technology index. I mean, the thing is that, can you see the 2000, if I remove, no, probably I cannot remove the years, but if I remove the years of that chart, would you be able to guess where the famous financial crash of 2008 is? I don't think so. Do you see my point? It is this. I mean, the one of the COVID one or December 2018 was pretty much, I mean, in the NASDAQ, yes, for example. Then if we go to the to the S&P 500, you could see the financial crash more clearly. But that tells you as well that this is not a good moment to invest, in my opinion, or to put most of your money in the market right now. Finally, the Dow Jones Industrials, the Dow 30, the same, pretty bullish, but be careful because look at this. Look at how steep that is. And for example, this is from 2009. This is, let's say, a normal market, which maybe as well it wasn't very normal because, I mean, this was what, let's say 7 years, 6 years of pretty much going up all the time. But that steepness is more normal, let's say. This is what it's not normal. So there you go. More. Then we have the very strong US markets, but we have some other markets that are not doing that well. For example, the FTSE 100, the UK's most important index, or the Spanish one, are still not above. So this is the Spanish IBEX, and it's not still above the 24th of February. That's fair enough. So yeah, it was even at the end of February when everything started to drop. So look, the clever people that I was talking about knew or escaped the market. This is more or less the 20th of February. So pretty much 1 month before, I managed to escape the UK to go back to Spain to stay with my family. So normal traders probably got scared at around the 15th, but look where the price is. So the professionals sell here, the non-professionals sell here. So the professionals make money and don't lose money, and the non-professionals lose money, lose money. And the FTSE 100, more or less the same. Where is it? Here it is. So, I mean, again, these are very, look at this, 1988. We were not born, yeah. So, but again, this is the 20-something of February, and still, it hasn't been able to reach those levels, whereas the US markets, this is end of February, and they've gone up much more. Anything else here? Yes. Any index that you want to discuss quickly, or any stock that you want to discuss quickly? I don't know, is there any index or stock that you looked at today or this week on your investing app? No? So, actually, one question. I use a called app investing.com. I think it's pretty good. So it has this, I don't know if you can see it. So do you use any other app, or which app do you use to check the markets? None? So something again that you need to, I mean, you can have the FT to read news and all of that, but it's important that you have a look from time to time at a investing app. I mean, just to see what if the markets are green or are red, and with what percentage. That's very important because it gives you a good view of what the market is doing that day. or that week or whatever. So it's 47. There are so many things that I wanted to discuss, but I have no time. But do you have time until 1/4 Do you have time until 1/4 to stay here? Cool. Okay. Okay, you can leave at o'clock, for example. Yeah, you can miss you are going to miss the investing game mate and the Kahoot, which are pretty good, but anyway, for next meeting, it's fine if you leave at o'clock. So next. So what are the limits and rules of the competition? Competition, I mean the virtual fund with respect to other groups and the fund managers groups, let's say, group. So no hard criteria, but has to be risk-adjusted bonds equities. What do we mean by this? So a good investment portfolio should have some part of fixed income, which we can go in the next meeting, which are bonds, and some other part in equities. Then you might want to have a small percentage of the portfolio in cryptocurrencies or venture capital or private equity or things that are much more volatile. So that's why you should have a small amount in the portfolio, but we ignore those more volatile things. And risk adjusted, it means that we cannot put 100% of our 1 million euros in the portfolio, because if, I don't know, the market decides to go down in the next 3 months, we will lose, I don't know, imagine 20% of our money, which is 200K. And that will mean that we have not risk adjusted our portfolio, because bonds, for example, even though the stock market might go down 20%, because by the name fixed income, it produces some fixed income from time to time. These assets are less volatile, so if the stock market goes down 20%, this less volatile fixed income or bonds market might go down, which it will go down, of course, as well, but only by, let's say, 5%. So that is what we mean by that risk adjusted. If we put 50% and 50% in a market that goes down, we will lose less money than in a market that, or we will lose less money than if we put 100% in equities if the market goes down. Then we must invest globally, not just UK and US markets. So the same, we could go to India, we could go to China, we could go to South Africa, we could go to Brazil. Okay, it's not just focused on UK or Europe or US market. No more than 5% cryptocurrencies. For what I've said, I mean, these are very volatile assets, and there is no underlying economic factor behind them. So cryptocurrencies, I mean, just move depending on technical factors, which we will cover as well in the next meeting, for example. The famous technical analysis, which is what I showed you here. You put some lines, some resistances, and those things. So cryptocurrencies are just based on this technical analysis that is done by the hundreds of investors or players that take part in that market, because there is no underlying economic factors in terms of interest rates or the GDP of a country or the world GDP. If it goes down or up, the stock market should follow that, but cryptocurrencies have nothing to follow. Then no options, futures, swaps, forex exchange. This is again, this is a bit, more complicated financial derivatives, which we will not cover or we will not have in the portfolio, but that we will cover in one of the meetings. The portfolios are responsible for some form of hedging. So this, what do we mean by this hedging is, so for example, for the part of the stocks, we might want to invest because we think that even though the market is going up, we still think that the market will carry on going up. So we buy a bunch of stocks. But to hedge that part of the portfolio that is towards the bullish market, we might want to buy some other companies, for example, some supermarkets, because we think that the market will go up, but in the end the market goes down. So supermarkets might do well in a market, for example, this winter, if everyone has to go back to their houses, so supermarkets will do well. So even though the market goes down and our part of the portfolio that thinks that the market will go up will lose, because we have those supermarkets in our portfolio, those supermarkets will act as a hedge. All right. More. Then how to formulate a trade idea. Okay, I took this from these two slides, the fundamental and technical analysis. You can read that in the slides. Yeah, actually, I will put these slides in the Facebook group. You can read them. I'm not going to go over them. We can cover these things more in depth other day. But mainly fundamental analysis. We have the fundamental analysis and technical analysis. Fundamental analysis is based, let's say, in economic factors, in what is happening in the world, let's say. So yeah, you can read all those bullet points, and we can cover this other day. And then technical, so again, you can read that, and yeah, the thing that I told you about drawing some lines and those things. So I think it's more interesting if I give you this example of how we might want to come up with a trade idea, because that is your main job this year or during the competition. The main part of the analysts is to just, I don't know, imagine next week, one morning when you get up, if you read the Financial Times, you might come up with a company that interests you. This is important. If you come up with something, it should be something that you like or that you are interested in, because if not, it won't be good, as with anything in life. So for example, interest rates are likely to rise as inflation fears pick up, as I said. Okay, that is my, this is kind of my point of view. So because of that, let's say, or let's kind of wonder, so what has happened in the past? Because most of the times, if not always, what is happening right now has happened in the past. I'm not talking about maybe the past 10 years. It could be at some point in the past 100 years. Obviously, it would be more difficult to find information that far away. But, for example, we can then Google sectors that perform well in a rising interest rates environment. Again, because we think that interest rates or inflation rates or inflation will go up, so interest rates should go up. So what happens in that environment? Then We can read some of the first entries of the Google entries. So read that. I mean, it's a lot about, has to do with read. Then select a sector. I don't know, the glass industry, the food industry, the automobile industry. Okay, something that you like and interests you. Select around, I don't know, 5 companies, could be 2, could be 7 in that sector. I mean the main ones, the biggest ones, and by biggest I mean market capitalization. Then choose the leading one. Maybe not the leading one, but the 2 leading ones. And again, by leading, you will probably find in the article that it says this company is the leading one in this sector or something like that. Then, has its net income been positive for the past years? Net income is just the how much has the company earned and how much has the company spent. So that net difference is what net income, which is one of the important measures to look for in a company. So we need that positive for the past years. Has its earnings surprised the market in the past? So again, the same. Then look at the share price. Is it near highs? Is it near lows? You need to decide if it is a good investment. All right. But I mean, again, common sense and intuition are probably the most important things. I won't cover ex ante, which is the trading platform. I mean, we just don't have time. It's now 59, so give me 1 more minute and you can leave. Okay, cool, mate. So similar to this, so we have a search area here. We might do write Tesla, right click, chart, and actually this is pretty small, but it's fine. So we decide that we might want to, or we want to put some money in Tesla. So what ex ante is going to do for us is to do the job of putting the trade into the market. So this right hand part, it's where we put the trade. I won't go now in this bid ask price, in the spread between the two, but you pretty much put the quantity of shares that you want to invest in. So if you have in mind an idea, we want 50k, for example, we need to do some numbers there. Okay, we just need to divide 50k by 1193, for example, and we will get the number of shares. All right. And there are some other things. For example, we don't want to buy the stock right now. We want to buy the stock if it goes back to those levels. For example, imagine 1,000, for example. So we might want to put that trade and tell the platform that if Tesla goes back to 1,000, the platform will trigger that trade automatically. All right. But yeah, I can go over the platform the next day. I have some things to cover the next meeting. Cool, so it's 1 minute past. So yeah, very important. Now, I don't know where is the page, it's there. I want you to check the share price again. Actually, I don't think we left a space, but you can put it underneath. So write down the price of the stock again. I mean, now you look for it again and you write down the price of the stock. Then go to your calculator app. Once you've written down the share price right now, and you do this operation, which you might think, oh, very difficult. No, So you need to do present time of your stock price, so the time right now, divided by, I mean, you don't have to do it now, you can do it while, I mean, everyone is done with the, so yeah, just put it, are you done? So yeah, pass it, oh, okay. So present time, so the stock price right now divided by the stock price, let's say 45 minutes ago. Then if it is on your phones, I think you need to equal that. So you cannot do this operation all together. If it is in a normal calculator, yes, but not on a phone. So you do present time divided by 45 minutes ago time, price, then equals, then -1 equals, then times 100% and equals, obviously. And that will give you a percentage change. So it will be not something. Might be negative, might be positive. So the game is about getting the highest percentage change. And this game is good because it teaches you this formula, which it might take you sometimes to memorize, because I mean, you might get confused if the present time is in the numerator or in the denominator, but it's something very important that you need to know, because you do this many times if you invest, let's say. Because I mean, you might want to know, oh, what's yesterday Tesla was at 1,100, and a year ago it was at 600. Oh, that's a massive change, so let's check it. And you do it with your phone or whatever it is, and you get the percentage change, which is really what tells you how much the stock price has changed. Because from 600 to 1,000 tells you nothing, or from 10 to 12 tells you nothing. But if you do the percentage change, you will be able to compare different stocks. Cool. So, okay, you have there the sheet. We have 10 minutes for the Kahoot. So the thing is that I think I cannot change, I cannot start the Kahoot, because if not, I mean, we cannot, I mean, the people that have finished, yes, but not everyone. So let me get ready the Kahoots. It's 5 parts, so let's see if we can do it quickly. Okay, so have you been able to do your percentage change? Cool. So tell me. 0.5. Okay, that's pretty good. Yeah, that's pretty good in 45 minutes. 1.77. What did you choose? 1 point? Oh, you will probably win, mate. Because I mean, you tell me if a stock moves 1.7% in 45 minutes. Yeah, good, mate. Good. How about yours? 0.55. I'm very impressed, because normally we should get here not something, and of course negative, because I mean the market goes up and down. Yeah, cool. More. What did you get? 0.3. 0.3. Okay, that's more normal. It's still really good. Because, I mean, again, the thing is that, for example, bond markets, guys, might move in 1 year 1.77%. In 1 year, not in 45 minutes. All right. So if you start trading the market and you start with bonds or fixed income, and after a year you see that that fund or that bond or whatever it is has moved, the price of that fund or bond has moved less than 2%, less than 1%, don't be surprised and think, don't be surprised about that, but don't think, oh, this is pretty boring, I need to go to something that moves a lot more, so I'm going back to cryptocurrencies. Okay.
Mine was not very full.
0.1.
That's more normal, and it's still good. I guess that you could win other day with that perfectly.
First negative one, minus 0.18.
Cool. Yeah, that's very normal as well. So let me look for mine. So mine was 1548, I think. 1528. Oh, I've done not bad. Okay, and yours is 0.7, 0.57. This is yours. Sorry. Minus 0.9. Cool. So just a second, and we'll go with the Kahoot. And mine was 1543 over 1528 minus 1 times 100. Well, that's pretty good. 0.98. I'm very impressed with myself. So, winner, cool mate.
I'll go for the Harry version. Allergic to nuts.
Cool, so let's go to the Kahoot finally. So, play. Host challenge, I guess it's host. Classic. Get ready to join. Loading game pin. Okay, so go to kahoot.it. Maybe you've done this before, maybe not. But Google kahoot.it. Put that game pin and then your name. I see that no one is having problems, which is great. And I don't want sound. I think there is sound, but yeah, we don't have sound, which is fine. Very impressed. Oh, I have here the companies. Petros Pharmaceuticals, very good, mate. Yes, pharma is always pretty volatile. A good one, nobody put that a good one was Tesla. And nobody put it. Right, let's start. 368, cool. So good luck. And the Kahoot is just, financial knowledge. So you have 20 seconds, you have to pick one of the 4 options. You read the question. What do the letters in the FTSE 100 index stand for? Let's see if we can live by 20 past. Oh, that's really good. Well done. Who was the quicker? Chantal? Who? Cool. The 100 listed companies on the FTSE 100 are the companies. Yeah, the biggest market caps. Cool, very good. Conrad. Nice one, mate. And Chantal again, twice. And Gabriel. Cool. You've got right both. Who's the governor of the Bank of England? Kind of the chair of the Bank of England right now. This one, it's not easy. Well, we're impressed with your knowledge so far, guys. So Conrad and Gabriel, very well done. Chantal, you missed that one. Okay, 15 questions. When did Andrew Bailey start as the governor of the Bank of England? This one is even more difficult. Only 3. Yeah, March 2020. And before that was Mark. It was the answer before. I don't remember his name. Mark something?
Oh,
Yeah. Cool. I forgot who's first. The Bank of England's current base rate is, I guess it is very low. Yeah, 0.1%. Look where interest rates are. No, none of the two on top got that right. Who's the president of the European Central Bank? This one is easier. I hope no one chooses Donald Trump. Very good, Christine Lagarde. Very good. Oh, Holly, very good. Gabriel and Jack. Where is Christine Lagarde from? This one is not easy. Who got it right? Cool. Congrats. Cool. That sounds French. The European Central Bank's current rate is, again, something very low, 0%, 0.25, yeah. 0%, nobody got that right. Who's the chair of the US Federal Reserve? I hope that no one chooses, or someone chose Jeremy Corbyn. That's funny. Jerome Powell, yeah. Very good, guys. Jack. Cool. Powell has a degree in, and that is relevant to you. Oliver, that's relevant. This one is relevant to you, yes, in politics. So that shows that it doesn't matter too much. I mean, to a certain point, let's be honest. It has to, I mean, the world of finance has to interest you. If not, obviously you won't end up in that industry. Well done, Jack. Jack? No, mate, are you going to win both? So again, it's very important to know these things. Oh, that was quick. Very good. So we have 3 more. The Cetra tax index is the main index of, very important, index Germany. Nice, Conrad, nice, Holly. Chantal is still there, very good. How many constituents are in the German DAX? How many, let's say, stocks? 30, very good. 50, no, 50, no. Oh, Jack! Well done, Conrad. Gabriel, Holly. And is the next one the last one? No, I don't think so. 2 more. Oh, it's gonna be tight. The letters S&P 500, I mean S&P stand for Standard & Poor's. Yes, the rating agency. There are 3: Standard & Poor's, Moody's, and anyone? Standard & Poor's, Moody's, and well, don't remember the third one. Right, so Conrad and Holly and Jack have possibilities of winning. So the final question, how many stocks currently are in the S&P 500? And the answer is 505. There are some companies that have more than one stock listed. For example, Google with Alphabet. Right, so the winner is, okay, third position, Jack. Oh, second, Holly. Conrad. Well done, mate. Cool, guys. So, very last slide quickly. End of the session. Thank you very much for coming. You can message me at any moment on Facebook or WhatsApp if you want as well. I mean, you can ask for my number. You can talk to me if you want to discuss something in private now. So if you want to speak to me privately now, you can. Wider fund meeting next week, Tuesday, 9th of November 2021. I don't know the time, I don't know the place, I don't know if it will be in person, no idea, but you will get all the info in the LUUTIS page. Probably if it is Tuesday, maybe by the end of this week, maybe. Then look for possible trades. I want you to come the next day with something. A company, for example, and some bullet points. So I mean, name of the company, country, has to be public. I mean, I haven't mentioned that. What means public? It is listed in a stock exchange. Okay, cannot be private company because we cannot put it in the portfolio. All right. So yeah, name of the company, country, sector, what it does. Something about earnings, if you know a bit, share price, basic things, but I mean, show me that you spend, what, 15 minutes before the meeting. Okay, you are very welcome to spend 2 hours. It doesn't have to be obviously before the meeting, it could be any day. But yes, please bring with something. I have to say that I will put a trade by next week's fund meeting. So I have something to discuss in the meeting next week, because one of the things the fund managers will ask the portfolio managers about how the portfolio is doing and why they invested in a particular company and all of that. So you will see something new in our portfolio next week. If you come to the fund meeting, you don't have to come. You are very, very encouraged to come, but you don't have to. It's up to you. And yes, see you in 2 weeks. Okay, I don't want to do this weekly because I feel that, I mean, some things are good to do weekly, but some other things I don't think so. So I prefer to do this group meeting 1 week, then the week after fund meeting, the week after group meeting, and so on. So hopefully see you in 15 days, 6 p.m. Wednesday, same room, 1.02. And that's it. Thank you very much for coming, everyone. And that, if you have any question or anything throughout these 2 weeks, just message me. Thank you, everyone.